the mighty US dollar. It's the world's reserve currency, it's the backbone of global trade. But lately it's been feeling a little shaky. Is this just a blip, or are we witnessing the beginning of the end for the almighty dollar? Buckle up, because we're diving deep into the dollar's uncertain future. We'll look at what's driving these changes and what it means for you. The dollar's value directly impacts our lives. From the gas pump to the grocery store, a weaker dollar means higher prices, and that means less money in your pocket. We'll explore the factors that are putting pressure on the dollar, both domestically and internationally. It's a complex issue with far-reaching consequences, but understanding the basics is crucial for anyone who wants to protect their financial well-being in these uncertain times. So let's break it down and see what's really going on with the US dollar. This isn't just about numbers on a screen. This is about your money, your future, and the future of the global economy. Remember when you could get a gallon of milk for under $5 or a carton of eggs without taking out a small loan? Yeah, those days seem long gone. The reality is the value of the dollar is shrinking and we're all feeling the pinch. Inflation is eating away at our purchasing power. That means the same dollar buys less and less as time goes on, and it's not just groceries. Everything from gas to rent to clothing is getting more expensive. For everyday Americans, this means making tough choices. Do you cut back on essentials, dip into savings, or try to make ends meet on a tighter budget? The shrinking dollar is forcing millions to confront these difficult questions. The impact is real and it's hitting hard. It's time to understand what's driving this trend and what we can do to mitigate the damage to our wallets. The US dollar isn't just some piece of paper, it's a symbol of American economic power. But that power is being challenged on a global scale. Several factors are contributing to the dollar's decline. One major factor is the rise of other currencies. The euro and the Chinese yuan are gaining traction in international trade. This means the dollar is facing stiff competition. Another issue is the massive US national debt. The more debt the US accumulates, the less confidence investors have in the dollar. Geopolitical uncertainty also plays a role. Wars, trade disputes, and political instability all create volatility in the currency markets. This volatility can weaken the dollar. And let's not forget about inflation. When inflation rises in the US, the dollar's purchasing power decreases. These factors are all interconnected and create a complex web of challenges for the US dollar. Understanding these challenges is essential for anyone trying to make sense of the global economy and its impact on our lives. So, the dollar is losing value. What do you do with your hard-earned cash? Do you hold on to it, watching it slowly erode, or do you invest in assets that might hold their value better? It's a dilemma many people are facing. Investing in stocks, real estate, or precious metals can be a hedge against inflation. These assets tend to rise in value as the dollar falls, but investing always comes with risks. There's no guarantee of returns, and you could lose money. Holding cash might seem safe, but inflation slowly eats away at its value. It's like watching your money melt away. So what's the answer? Well, it depends on your individual circumstances, risk tolerance, and financial goals. There's no one-size-fits-all approach. Consulting with a financial advisor can help you make informed decisions. Remember, the key is to be proactive and take control of your financial future. Section 5, Winners and Losers. Who benefits and suffers from a weaker dollar? A weaker dollar isn't all doom and gloom. In fact, it can actually benefit certain groups. For example, US exporters often see a boost when the dollar is weak. Their products become cheaper for foreign buyers, making them more competitive in the global market. On the other hand, a weak dollar can hurt consumers. Imports become more expensive, leading to higher prices for everything from electronics to clothing. Tourists also feel the pinch. Their dollars simply don't go as far in countries with stronger currencies. Investors holding assets denominated in foreign currencies can benefit from a weaker dollar. Their investments become more valuable when converted back into dollars. However, those who hold US dollar-denominated assets might see their investments lose value. It's a mixed bag with both winners and losers. Understanding how a weaker dollar impacts different segments of the economy and different groups of people is crucial for navigating these uncertain times. Section 6, History Repeating. Lessons from price controls gone wrong. Governments have tried to control prices throughout history, often with disastrous results. Price controls might seem like a quick fix for inflation, but they rarely work in the long run. In fact, they often exacerbate the problem. One classic example is the Nixon administration's attempt to control inflation in the 1970s. The result? Shortages, black markets, and a deepening economic crisis. Price controls distort the natural forces of supply and demand. They create artificial shortages and discourage production. When prices are artificially suppressed, businesses have less incentive to produce goods and services. This leads to scarcity and long lines. History teaches us that price controls are not the answer to economic challenges. They often lead to unintended consequences that worsen the very problems they intend to solve. Section 7, Jobs and the Economy. Reading the signs for the dollar's future. The job market and the overall health of the economy play a significant role in the value of the dollar. When the economy is strong and unemployment is low, the dollar tends to be strong as well. Investors have confidence in the US economy and are more likely to hold dollar-denominated assets. However, when the economy weakens and unemployment rises, the dollar can suffer. Investors become wary of economic uncertainty and may pull back from the US market. Recent job market data has been mixed, with some sectors showing growth while others struggle. It's essential to keep a close eye on these trends and what they might signal for the dollar's future. Factors such as wage growth, inflation, and interest rates all influence the strength of the dollar. Understanding these economic indicators can help individuals and businesses make more informed decisions in uncertain times. Section 8, the importance of financial preparedness. Weathering the storm. The future of the US dollar remains uncertain. Global economic forces, domestic policies, and unforeseen events can all impact its value. In these uncertain times, financial preparedness is more critical than ever. This means taking proactive steps to protect your financial well-being. Diversifying your investments is one important step. Don't put all your eggs in one basket. Consider investing in a mix of assets such as stocks, bonds, real estate, and precious metals. This can help mitigate losses if one asset class underperforms. Creating a budget and sticking to it is also crucial. Track your spending, identify areas where you can cut back, and prioritize saving. Having a financial cushion can provide peace of mind during tough times. Staying informed about economic trends is essential. Pay attention to news about inflation, interest rates, and the job market. Understanding these factors can help you make informed decisions about your money. Remember, knowledge is power. By staying informed, diversifying your investments, and managing your finances wisely, you can weather the storm and secure your financial future.